Hi, I'm Jim Jubak, and welcome to my YouTube video for March 3rd. You'll notice that I'm not wearing any baseball gear today. I'm in mourning. The breakdown of baseball talks that has led to the cancellation of spring training as well as the first two series of the regular season is, in the cosmic scheme of things, not a big deal, but I'm finding it depressing. If you want to see more stuff, you can go to my free site, jubakpicks.com, 3 portfolios, posts every day. My paid site, jubakam.com, which has 6 portfolios, more posts every day, and you can find the links to both of those down below. If you like this video, please like it, subscribe to my YouTube channel, because that way you get notification every time we're doing a new video, and we're doing about 3 a week. Topic is, you should own more commodities. And I say that emphatically, even though commodities have had a huge run so far. There are 2 basic reasons for this. One is that we went into the Russian invasion of the Ukraine with supply deficits across the board in everything from copper, corn and wheat. Companies in this business simply hadn't invested enough capital to keep supply up with demand, especially when we got a big kick up in demand with the ending of the worst of the pandemic, as well as problems in the global supply chain. So even before this, prices were on a rise. But then came the Russian invasion of the Ukraine, and we all know about the impact of that on oil prices. Russia is one of the big non-OPEC producers, but also things like aluminum, fertilizers, and then, along with the Ukraine, wheat and corn. That between the 2 countries, they supply about 25% of the global trade in those 2 commodities. They're not getting them out of the port. You know, God only knows what planting season is going to look like. Prices have spiked. So right now we're looking at wheat being $11 a bushel. That's the highest in 14 years. Zinc, $4,000 a metric ton. Aluminum has hit new highs. If you follow my stuff, you know that I've been pounding the table to buy oil stocks, natural gas, because of the coming, looked like, crisis and then invasion, and then I've been suggesting you buy aluminum. So let's look at how some of those have worked out. One of the first stocks I recommended is ConocoPhillips. They have a huge exposure. They've bought their way into the Permian Basin. They've got a huge production of natural gas and oil from there. Permian Basin happens to be one of the low-cost production areas in the U.S. So stock, it's not surprisingly, has gone from 68 back at the end of December to 96 today. Other stocks I recommended are Cheniere Energy, which is a big producer and shipper of liquefied natural gas. Liquefied natural gas has the ability to go anywhere in the world. You don't need a pipeline. It's more expensive than a pipeline. But again, you're looking at sort of a base built in December and then rocketing upwards as everyone realized that Europe has to somehow make up for the natural gas it's not getting from Russia, and liquefied natural gas is one of the biggest sources of that. Okay, so those were 2 of the 4 energy stocks I recommended. The others were Equinor, the big Norwegian oil and natural gas producer, and Pioneer Natural Resources, the big Permian oil producer. Okay, those are in my portfolios now. I also suggested that you buy Alcoa. Not a stock that you probably think about owning a lot, but you want to buy aluminum. Russia is the source of about 10% of the world's supply of aluminum. So what we've got here is this typical pattern, the lead up to the crisis, and the actual crisis. So you wanted to own Alcoa. One of the things that is very difficult is to find a way to invest in other commodities. The suggestion I have here, if you want to get exposure to a broad range of commodities, energy, yes, precious metals, yeah, but also agricultural commodities, you could look at this ETN. An ETN is like an ETF, but it's not quite. And the iPath Bloomberg Commodity Index Total Return, ETN, you notice it's got the same pattern. This is how, I think, if you want to get exposure to wheat, corn, and all that, would be the way I would go. I'm probably going to add it to the portfolio in the next couple of days. It is up 27% year to date, but I think that we're still got more to go. We're still in the early stage where people are still in denial about how big a hit we're going to take to production of wheat and corn. With any kind of ETF or ETN, you really have a kind of trade-off, which is you get a big basket, but the basket is really not as efficient necessarily as buying an individual stock. It's not as targeted. If you pick the right stocks, you should be able to outperform the basket. One of the things to look at here, you get, yes, agriculture, yes, energy, but you get precious metals, which haven't been going anywhere recently. So if you want to get more focused on just agriculture, you might want to look at an ETF like MOO, or you might want to look at some fertilizer stocks, and I'll have a recommendation for fertilizer stocks later in the week. Thanks very much for watching. This has been Jim Jubak. If you like this video, please give it a like, subscribe to the YouTube channel, because that'll get you a notification when the next ones are up. If you want more of my stuff, including the portfolios in which some of these stocks are, you can go to my free site, jubakpicks.com. More portfolios, including some that include options, on my paid site, jubakam.com. Links to all those are down below. Thanks for watching.